Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased technical analysis. It is a Saturday, it's around 7 a.m., 7:40 a.m. Eastern time, and I'm going to do analysis for Fridays, for yesterday's price action, and we're going to talk about the plans for next week, the setups and triggers we need to watch out for, okay? But this past week, guys, Uncle Charles has been bearish because I've been saying since August high we are in a bearish trend. All right, and the big question was, are we gonna get the lower low? And yes, we did. We can look on the daily chart here. We did get the lower low right here. All right, but while bearish swing traders got to eat very well this past week, okay, you know, we had a few days this week where it was a bit tough to day trade. Even if you was a bearish day trader, it was a bit tough to day trade because of all the choppy price action. Okay, we had the CPI earlier this week, and even though it was a massive gap down, the intraday trading day was amazing as well because the move continued. But then we had chop, we got the gap down, then intraday we had more chop. All right, so it's very important that we as day traders, we got to recognize what phase the market is in. I talk about this all the time. Trend move leads to chop move lead to trend moves. And this past week, you can look at this chart, very good example of it. And we want to be able to recognize the different phases because the approach is different. Trend days, you buy the breakout, you buy the breakdown, you follow the trend. Always still got to respect your stop loss. But on chop days, you got to be a lot more tactical with your entries, a lot more tactical with your exits. You definitely cannot be greedy on chop days. Okay, so that's what we had. So what are the moves? What are the next plans for next week is the question. Okay, I want to talk to you guys about the outside day candle. Before we get to the daily chart, let's get to the weekly chart. Let's start this off with the weekly chart. We just had a couple of bearish setups based on the weekly chart. First of all, we broke down this multi-month trend line, this orange multi-month trend line. We got the confirmed close on the weekly chart. Okay, that's first thing. Second is the outside weekly candle. Outside weekly candle. Okay, that is when the current candle, this candle, engulfs the previous candle. All right, that's pretty much what it is. There's a bullish version of it, and then there's a bearish version of it. What we have right now is a bearish outside weekly candle. It's a bearish one. Okay, so outside candles can mean one of three things. It could mean a reversal. It could mean a breakout or a breakdown is building up to actually break out or break down. But in this case, in my opinion, this is a sign of a trend continuation. Okay? When in doubt, zoom out. So we're zooming out, looking at the weekly chart here. We are on a downtrend, guys. So it's possible, based on the information we've studied about the outside candle, the strategies you trade based off of it. This is possibly a trend continuation. Okay, so with that being said, Uncle Charles is still bearish. All right, but since we're looking at the weekly chart, this might favor like more swing traders, people looking at it more medium term. What can we do as day traders to make money off this? Well, Uncle Charles' strategy is always the same. We identify the levels, we identify the setups, and we just trade it unbiasedly. Okay, so we're looking at the daily chart. Earlier this week, I had this trend line down like this. It's looking like a falling wedge. Okay, and I will still reference this trend line, of course. But for now, it looked like the market makers, they already use this trend line to fake us out up here. So it's possibly they're building a new range, a new resistance of liquidity. Get what I mean? So I'm gonna adjust it here, but I'll still reference that trend line as before. But for now, leave that like that. But we see here, guys, it's looking like pretty big bull flag as of right now. Okay, I know it's only 2 touches at the resistance level. I know usually we need about 3 at least, but it's just something I'm tracking because in order for it to be 3, it starts off with 2 touches. So I'm just tracking it. And this one, this was a 4th touch right here on the support line. All right, it bounced, 383 held. We got a couple of false breakdowns of it intraday. Uncle Charters got faked out as well. You know, it happens. Next week we get back on the horse. We try again and we do better. But it slopes down this trend line. So right now, 382 is the breakdown level of this trend line. Also, you know, looking at intraday, we did get a double bottom off that 382-ish level. So there's significance there. So we got to pay attention to that. And I do believe if we can break down 382, we can definitely see more downside. Definitely be a trigger for me, at least, to enter puts. Breakdown of this trend line. We could possibly head down lower. I have a level at 380, 378.5 gap fill, and the 78.6 retracement level at 377, okay? That 78.6 retracement level is based on June low up to August high. Okay, guys? So I'm still favoring downside because we broke down this multi-month trend line. Bulls are still in control. But as a day trader, I gotta look at it from the short term as well, unbiasedly, okay? So the levels I was looking at, well, I'm looking at now is 386 and 385.5 is zone, okay? If SPY can clear that on Monday, we could possibly get, you know, a relief rally all the way back up and test some key resistant levels, starting with that 61.8 retracement level at 388.7-ish, okay? We hit that level a couple days ago and we gapped down from there, okay? So can we fill the gap? We will see. If we can clear 388.76, that will be a trigger for calls, of course, and target 390. That will be our next level. All right, 390 is the 23.6 retracement level from January high down to June low. Okay, so can we recapture 390? That would be very bullish. And above that is the multi-month trend line. We broke down this trend line this past week. And as long as we're below it, bears are in control. But we still could possibly get a back test. Keep the back test and go strategy in mind, okay? And that level for Monday is around 393 now, okay? So if SPY can clear 390, 393 would be the target, the next target. And if clearing that would be very, very bullish. And we could possibly trigger some more upside. 397 is, that's the 50% retracement level and a test of this downtrend line right here, okay? That would be about around 405-ish actually, okay, for next week. Above 400 to 405-ish for next week, all right? So, remember, like always, in the short term, we need to see some resistant levels clear for us to either buy calls or if a support fails, to buy puts, okay? So 386, need to see that cleared to buy calls targeting the upside targets 388.7, 390, 393. Okay, above 393, very bullish. Bulls possibly could take back control or the relief rally can go even higher than we thought. All right, remember, 382 is a very significant level. We saw it intraday on the 15-minute chart, double bottom, as well as this aligning with this downtrend line right here, okay? Got 1, 2, 3, and we got the fourth touch. A fifth touch, it might give in, guys. It might give in, and we could target more downside, giving us more of the low, and continuing this downtrend from August high, as well as the downtrend from January early this year. Okay, guys, don't forget, outside weekly candle. That's usually bearish and usually a sign of a trend continuation. In this context, it's a sign of trend continuation. All right, we're gonna move on to triple Q. Triple Q clear, failed, gap below the 290.7-ish level. So I need to see 291. We'll round it to an even number. I need to see 291 cleared, and that can possibly trigger a back test of the 294 level, critical level. Okay, 294 was based on the 61.8 retracement level from June low to August high. Okay, so we see if we'll back test it. That's a very critical level that's triggered this down move. We back test it, we watch reaction. We get a strong selling pressure or a hot stove rejection, good sign to enter puts. If it is recaptured though, that is a false breakdown, and we got to, do our best to play it unbiasedly. You can see here on the weekly chart, Triple Q also has an outside weekly candle. Let me zoom out. We'll fix the chart. Okay, so you can see here downtrend since August as well, and downtrend since, January. So possibly trend continuation, guys. More downside. Okay, I'll be short-term bullish if 294 is recaptured. As of right now, still bearish as long as below. And here's Tesla. Tesla just struggling to clear that 304 level. All right, we got some washes above it intraday, but just could not close above it on the daily chart. It did put in higher lows this past week. September 13, September 14, and September 16. You see the higher lows. So Tesla needs to clear that 304 level and actually hold it to trigger more upside, 310-ish, 314-ish, 318.5-ish. Okay, I'll be bearish if Tesla can break back below 297.3-ish. That would put 296 in play. We actually got a bounce off of it. Did we get a bounce off of it? Yeah, we got a bounce off it yesterday. So 297.3 is 296. If 296 fails, guys, very, very bearish. But it would put the 200-day moving average in play, where bulls will have their last chance to make a stand. All right, which is right now is around 293.5-ish. But if that fails, guys, hard to be bullish on Tesla if the 200-day moving average cannot hold. Okay, that will put 290 and 287.5-ish and lower 285-ish. 284.3-ish. Then the 50 days around 281.4-ish. So just let the price action guide you, okay? First support that got to go and fail is 300.8. And if that fails, 297.3-ish and then 296, okay? As long as that level hold though, 300.8-ish and then 304 clears, just play it unbiasedly, guys. Follow the money. All right, so that's what I have for you guys. We're going to end this with the option flow. And this is SPY filter for 500K premiums or above. Overall bearish like usual. We are seeing some calls being bought with decent size, but the premium's not that big. Okay, this is 2.4 million, but it's a block order, so it's not that aggressive. But 26 million in size. This is 1.1 million, over 8,000 in size. All right, but their days all the way out in October, so they all got time on it. This one's 7.35 thousand in size, but it's a split type. Okay, but we do got a good amount of bearish sign, 3.3 million. It's a sweep, over 10,000 in size. This was September 16th. I don't know if they, but here we see more here. This is October 21st as well. Big size in the millions. So big money still overall bearish on SPY, just like Uncle Charters is right now. I'll still play it unbiasedly. Triple Q, yep, Triple Q is also bearish, very bearish, 96% in the puts. Here's Tesla, 54%. So yep, starting to go more on the bearish side with big money. So all right, so that's what I have for you guys. Good luck for next week, guys. I hope you guys found this video helpful, and if you do, consider joining my Discord. You get the best from Uncle Charters. Also get access to option flow and dark pools and all that stuff, and some market reports and more insight from other very experienced traders. Okay, but if that's too much, it does cost $75. If you don't like, maybe think that's too much, consider my Substack, where you can get my insights on the market before it opens, because my YouTube videos is usually after the market opens. After the market closes. But my Substack is before it opens. So if you like that, it's only $25 a month. All the links is in the description below, and I'll post it and pin it in the comment section. Okay? So thank you guys. Appreciate it. Have a great weekend. Peace.